I don't own gold in hopes of capital gains. I own gold as a form of insurance. If you think about gold as insurance and you think about how you get paid on insurance, you get paid when something lousy happens. Life insurance means somebody died. Auto insurance means you had a wreck. House insurance means you had a fire or a theft. I don't want any of those things to occur. But if they do occur, I want to get paid. So I don't want to see a crisis in confidence around fiat currency denominated savings products. I don't want to see that. But I think that there's a possibility that it occurs. And given that there's a possibility that occurs, and given that I can afford it, I want insurance. I will admit I own some silver in the quest for capital gains, but not enough that if I'm wrong, it changes my decision as to what to have for breakfast.
Gold futures posted their highest settlement in about a month on Wednesday, while silver prices climbed by 4%. Both precious metals were supported by weakness in the US dollar and bond yields following the release of downbeat economic data. The drop in the dollar and Treasury yields helped send gold higher, with the greenback falling hard on rising jobless claims and shrinking services sector data. Adrian Ash, director of research at BullionVault, told MarketWatch. RickRule, proprietor at Rule Investment Media, believes in holding gold for stability and insurance. While he suggests owning some silver for potential gains, more is needed to impact his overall financial strategy. From a technical perspective, Rick is concerned about a possible crisis of confidence in US Treasuries, which could devalue the dollar and drive higher gold prices. The US dollar's dominance as the global currency could face a challenge from China. In the first quarter of 2024, China sold a record $53.3 billion in US Treasuries and agency bonds, indicating a push towards diversification. The United States Treasury, and by extension the USD, became less trusted, less wanted, and less powerful. The objective dumping of USTs by global central banks and these entities' equally objective stacking of physical gold have massive yet sober implications for the US in general and the USD in particular. Based on his observation, Rick believes that just as insurance pays out when something terrible happens, gold protects wealth during financial instability. Despite initially losing purchasing power, his gold investments have appreciated by about 8 to 8.5% annually since 2000. Maintaining his purchasing power in a way US dollars wouldn't have. Historically, gold is perceived as a hedge against inflation, preserving wealth when the purchasing power of currency declines. Now we present the clips of RickRule's insights from his recent interview. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I think gold is a store of value and a medium of exchange. I own it as insurance purposes. I'm not one of those guys who cares particularly about whether the gold price is at 2,400 or 2,500. I'm not interested in a 3% move in the gold price. I am afraid, and that's exactly the right word, I am afraid that we will have a crisis of confidence against US Treasuries that will cause the dollar to deteriorate enough that my gold sells for $8,000 or $9,000 or $10,000. Ben, that isn't a circumstance I look forward to. I don't own gold in hopes of capital gains. I own gold as a form of insurance. If you think about gold as insurance and you think about how you get paid on insurance, you get paid when something lousy happens. Life insurance means somebody died. Auto insurance means you had a wreck. House insurance means you had a fire or a theft. I don't want any of those things to occur. But if they do occur, I want to. So I don't want to see a crisis in confidence around fiat currency denominated savings products. I don't want to see that. But I think that there's a possibility that it occurs. And given that there's a possibility that it occurs, and given that I can afford it, I want insurance. I began systematically acquiring gold for the third time in my life in 1998. And in the period, well, 1998 was 2 years too early. You know, my first experience, well, my experience in this round of accumulation, my first 2 years, I consistently lost purchasing power. But in the period 2000 to now, that gold has appreciated for me against the US dollar by about 8%, 8.5% compounded, which is to say it's done its job. I've maintained my purchasing power in gold where I wouldn't have maintained my purchasing power in US dollars. So gold has acted in my own portfolio precisely the way that I hoped it would act. I think other people hold gold for other reasons. There are people who are speculators who look back at the price history of gold, and they note that every now and then the upward price performance of gold is extraordinary. I wonder whether those people are skilled enough to speculate in gold, at once managing their own emotions and their own patience, while also understanding macroeconomics enough to time their purchases and sales intelligently. I know I'm not. As I say, I don't own gold in the quest for capital gains. I will admit I own some silver in the quest for capital gains, but not enough that if I'm wrong, it changes my decision as to what to have for breakfast.
Regarding global trust in currencies, RickRule notes that nations distrust the US dollar due to its weaponization by Washington. He believes the seizure of Russian assets has also highlighted these risks. Moreover, analyst predicts the BRICS nations will seek alternatives but won't back their currency with gold, as it limits political power. The decline of the US dollar as the global reserve currency could lead to a power vacuum in the international financial system, creating uncertainty and volatility that could negatively impact the global economy. If the BRICS nations develop their currency systems, they might reduce their reliance on the US dollar in international trade and finance. This could create a new global reserve currency. Concurrently, Rick mentions Doug Casey's analogy of the dollar as an I owe you nothing, and the euro as a who owes you nothing, suggesting that the BRICS currency could become a nobody owes you anything due to the lack of convertible currencies. He notes that China, Russia, and Saudi Arabia need a settlement mechanism outside the US dollar for their trade surpluses. Let's get back to the interview.
If you've been around as long as I and done business in as many of those countries as I have, you learn that although they don't trust the U.S., they trust each other less. The idea that they would build up large settlement balances with each other in non-convertible currencies is a non-starter. They have been forced out of the U.S. dollar because the U.S. dollar has been weaponized by Washington. The enemy of the U.S. dollar is not in Beijing or Moscow or Riyadh. It's in Washington. The weaponizing of the SWIFT banking system, which is international, not American property, the theft by the United States government of $300 billion in Russian assets in US Treasuries, whether or not you agree with Russia's policies, has let other countries know that to the extent that their internal policies are different from the policies preferred by the US government, that the US government will mechanize the medium of exchange against them. That's what the BRICS is about. Make no mistake, the BRICS currency will never be gold-backed. Gold backing a currency reduces the power of the politicians to affect their monetary goals. There's no politician on earth who ever entered politics to have his or her power constrained. That just will not happen. Doug Casey famously says, the dollar is an I owe you nothing. The euro, because of all the constituency, is a who owes you nothing. The BRICS threatens to be a nobody owes you anything as it gets farther and farther distributed among more and more countries that don't themselves have convertible currencies. Must the Chinese and the Russians find a mechanism of exchange between themselves outside the US dollar? Yes. Must the Chinese and the Saudis? But imagine that China ran in dollar equivalent terms $1 trillion surplus or some big surplus with the Russians. What do the Russians produce that the Chinese need? Natural gas and vodka? How much vodka are the Chinese going to consume? At the end of the day, they need an ongoing settlements mechanism so that the surplus value that they generate for the Russians results in the accretion of wealth to China in some medium of exchange that's spendable and convertible.
Like, why is it that we see the East buying so much gold in the West right now?
I think the Chinese see a couple things. At one point in time, they had $4 trillion in US Treasuries. And I think that they see an increasingly complex arithmetic outcome to that, which is to say the US dollar at today's interest rates, US Treasury securities aren't a good deal. I think that's one thing they see. The second thing they see is the increasing willingness of the United States to debase the dollar both as a store of value and a medium of exchange. The US government specifically enforces sanctions against third parties on third parties, which is to say the US government uses the SWIFT banking system to manage relationships, as an example, between Belgium and Iran. The Chinese don't see themselves as being beneficiaries of this. They see themselves as being victims of this. At the same time, because the renminbi is only partially convertible, China's trade partners might prefer to be paid in gold. And I'm sure that the Chinese, were they dealing with as an example, the South Africans or the Iranians, would be preferred to be paid in gold rather than being paid in rands or reals, respectively.
According to data released by the Treasury Department, foreign holdings of US Treasuries declined in April from a record high in March. The gold cycle bottomed in our June target window, and the breakout towards $2,800 is underway. How do you see the role of gold and other commodities evolving in the context of changing global financial dynamics? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.